Hey everyone, welcome to Explain the Charts. Today, April 21st, 2025, we're diving deep into the SPY, the S&P 500 ETF, to make sense of what's happening in the market. We'll be looking at recent news and correlating it with the chart data to give you a comprehensive analysis. According to recent news, S&P 500 futures have been volatile, reacting to concerns about potential Trump trade deals. We'll also need to keep an eye on how earnings from Tesla and Google parent Alphabet affect the index. Let's start with the daily chart to get a broad overview. On the daily chart, we can see the overall trend and identify key support and resistance levels. Looking back to late December 2024, we see the SPY trading around the 470 level, establishing that as a potential support if things turn bearish. We're seeing more recent trading, like April 7th, 2025, where there's a large green candle that jumps up from around 489 to 504. But there are also dramatic red candles of similar size, like the next one that's just a day away, with the index going from around 521 all the way down to 496. We'll want to look at the 1-hour chart to try and better understand what's happening. Now, let's switch to the 1-hour chart for a closer look at more recent price action. Let's narrow in on the trading for April 16th, 2025. It looks like it was fairly consistently trading around 530.00, but starts a downward trend and loses several points to close around 525.00. We can switch to the 15-minute chart to see this in even further detail. Now let's zoom into that same price action of the trading from April 16th, but on the 15-minute candlestick chart. This is a pretty volatile day. Looking at it in 15-minute increments gives us a better picture of how fast the index lost more than 5 points. The first set of candles in the early morning are relatively tight, indicating low volatility. Around 1400 hours Universal Time Coordinated, we see the index dip before recovering for a short period, before a large drop starting from 1710 to the close. This kind of fine-grained details are helpful when trying to anticipate when to trade. Based on our analysis, it's crucial to watch the 520 and 530 levels. A break below 520 could signal further downside, potentially testing lower support levels around 510, with a 60% probability if bearish news continues. Conversely, a sustained move above 530, fueled by positive earnings from major tech companies, could open the door for a rally towards 540, with a 40% probability. Keep an eye on the news regarding Trump's tariffs and their potential impact on the market. Also monitor the CBOE Volatility Index, VIX, for signals of increased market uncertainty. Good luck trading, and be sure to like and subscribe to Explain the Charts for more in-depth market analysis.